GLSI, de-risked biotech plus structural short squeeze in a long-term bull trend. Greenwich LifeSciences, GLSI, is shaping up as a rare crossover setup where fundamental de-risking and technical strength are reinforcing each other, all while the stock remains heavily shorted, 25% of the float, with an extreme 142% borrow rate. This isn't just a speculative biotech bounce, it's a structural pressure cooker forming within a longer term bullish trend. Number one, fundamental de risking is accelerating. The recent FDA approval for commercial manufacturing of the GP2 vaccine used in the Flamingo '01 trial is a quiet but critical milestone. It materially reduces execution risk and signals regulatory confidence in the company's production process, a key hurdle on the path toward a biologics licensing application, BLA. Layered on top of that is strong phase 2 open label data, which continues to show compelling efficacy in reducing breast cancer recurrence in HER2 positive patients, a clearly defined and commercially meaningful market. Together, these developments shift GLSI from a science bet toward a regulatory and commercialization story, which is exactly the transition institutions tend to re rate. Number two, insider behavior reinforces conviction. CEO Snehal Patel's consistent insider buying stands out in a sector where executives often sell into strength. That buying sends a powerful message. Management appears confident, not just in the science, but in the timeline and value of what's coming next. For many investors, this insider alignment strengthens the bull case far more than promotional press releases ever could. Number three, structural supply imbalance. Tight float meets heavy shorting. GLSI's extremely tight float is where things get interesting, with roughly 25% of the float sold short and borrow rates north of 140%. Shorts are paying a steep daily tax just to stay in position. That creates forced urgency, especially as the stock begins to print higher highs and higher lows. In setups like this, price doesn't need explosive news to move. Steady strength alone can trigger covering, which in turn feeds further upside. It becomes a reflexive loop: rising price, higher mark to market losses, more short covering, less supply available. Number four, technical context: strength within a larger bullish structure. From a market structure standpoint, GLSI is no longer chopping aimlessly. The stock is holding gains, printing higher prices, and showing resilience on pullbacks, suggesting accumulation rather than distribution. This kind of behavior often precedes range expansion, especially when paired with shrinking available float. Importantly, this strength is appearing within a longer term bullish trend, not after a parabolic blowoff. That distinction matters. It suggests the move may still be in its early or middle innings, rather than the end. Number five, why the market is paying attention now. The emerging narrative around GLSI isn't just short squeeze potential, it's the convergence of regulatory de risking, clinically meaningful data, management conviction, severe supply constraints, and rising price trend. When those align, valuation discussions shift quickly, especially in a high value oncology niche like HER2 plus breast cancer, where successful therapies can command outsized premiums and attract partnership or acquisition interest. Bottom line concept: GLSI represents a high conviction biotech with improving fundamentals that is simultaneously pressuring an overcrowded short trade. As long as price continues to trend higher and regulatory momentum remains intact, the setup favors upside asymmetry, with technical strength acting as the catalyst rather than the risk.
So the stock is up 45.52%. This is Thursday, the 22nd of January 2026, pre-market session, low float. I think it was mentioned there, with the float 50-day average, as you can see, is usually around 460,000 shares had to borrow. Yeah, indicated here 125%. Okay. Let's see what we have. Underlying trend, as you heard in that readout, strongly bullish. Yeah, you can see that underscored by its 200-day moving average. The stock has just been printing high prices since the whole of December of last year, 2025, and then this year it has been in an uptrend. Of course, it has contracted the expansion, the expansion that began on the 3rd of December or thereabout. It's actually ended on the 14th, so it's contracting that now. And now, as a matter of fact, it has resumed the uptrend because it has blown through this intraday high of 29.33. What do we have? We may have surely we'll have an intraday high here, 39, that's $6.99. So that is now probably an all-time high, surely 52-week high, you know. Okay, so we are not yet. Okay, the Argos got this one right. It was saying that today was going to be an uptrend, and it was just being modest in the extrapolation because this is not what we're looking at right now. It has gone way past all of this, but it's pretty much in line. It was saying that today was going to be an update, and that is what we are dealing with right now. The 4-hour chart is active, so let's go in there and see what we have. Here it's saying that the strength might remain in place up till Monday, pre-market session of Monday. So still indicating that tomorrow, the 23rd, it may still remain strong. So from Monday, it's expected that it might contract, then go into a consolidation. Here, projections are saying, let's see what we have, 31.61. We saw here as well 36.99. Okay, so momentum is also expected to remain strong up till Monday as well. So it's actually expected to get stronger. Momentum is expected to get stronger, and maybe towards Monday it may begin to flag. Okay, yeah. Let's see now what the market grid is going to give us in terms of possible prices. There's a chance that we may not have what we desire, but let's try anyway. Okay, yeah, it's the market grid hasn't reacted yet, so we'll try and see whether we can see anything on its 1 hour chart. Yes, it has reacted. So I hope it gives us something beyond 36. Okay, it doesn't. It didn't give us. It's still. You can see this is below its that intraday high of $36. So we'll take it anyway. The stock is now at 32.4. This is where it is. It's in the resistance zone. So there's a chance it might retest 32.91 and even go ahead and retest 35.39. You know. So let's see what we have on this 1 hour chart. Let's see whether there are any convergences, any confluences in terms of pricing, in terms of prices and supports. So let's see, 23 is looking like a mean it looks looking like $23, looking like yeah, it looks like something that can happen. Yeah. Maybe that's why you saw that the extrapolation was saying that it was going to correct from Monday. Okay, $23 looks like it's support. We can see that here the 10 period moving average, the 40 period moving average, they are all converging at that price. We don't have anything there, so we have this strong convergence of $23. What of 25? Do we have anything like 25? No. 24? No. No. Okay, so $23 looks like something that can happen. Yeah, in terms of a possible pullback. Okay, yeah. So the stock is trending. So this is a typical case of a de-risked biotech stock with a structural squeeze in it within a longer term bullish trend. So see what you make of the stock, and just be really careful. This is not a time to jump in. Wait for it to cool off before you do so. Thank you very much for watching this video.